Hello and welcome to the Morningstar series Market Reaction. I'm Emma Wall and I'm joined today by Rathbones' Ed Smith to talk about India. Hello, Ed.
Hello, Emma.
So last week marked the 70th anniversary of Indian independence, and you've been drawing some interesting parallels with India right now and China at the turn of the millennium, saying that this may be an advantageous time for investors to join the Indian market.
Absolutely, and a lot of that is to do with government policy. So one of the reasons why China grew so much over the last 15 years and India lagged behind is because China had a government that was all about facilitating investment, and India was mired in bureaucratic lassitude that has meant today it is very underinvested. Now, Prime Minister Modi has finally started to break that bureaucratic lassitude. Important milestones have been reached, such as the goods and services tax overhaul. And he's got some other interesting policies which suggest that he may make it easier for businesses, for foreign investors, for domestic investors to invest in the productivity enhancing technology that enables a country to grow. And
another tailwind for India is the demographics. I mean, we're constantly hearing here in the UK how we are overweighted in terms of our elderly dependents. The same problem is happening across Europe and indeed even in Japan. But India is a bit of a sweet spot for demographics, isn't it?
Absolutely. So India's working age population today is about the same as China's was in the year 2000, but because of more favourable demographics, India's working age population is going to overtake China's by 2025. So a much stronger demographic dividend to growth. That could have some interesting implications for global prices. We know that inflation is low in no small part because China's working age population joined the global workforce. If India starts to open up, starts to take more of the of global share, a bigger share in global trade, particularly services trade, which hasn't really yet been globalized, we could see some interesting inflation dynamics from that in the West too.
Of course, China has been a great place to be over the last 20 years, but China today is probably more synonymous with negative investment sentiment than it is positive. So saying that India is the new China may ring some alarm bells for people. If you want to enter into the Indian stock market now, should that be a concern? Growth that happens too fast, a switch in demographics, interesting political interference in the stock market, for example, that has mired China in recent years?
Yeah, absolutely. I mean, so I spoke about China's policymakers being all about investment. After sort of 12, 15 years, that started to turn into overinvestment, into excess investment, and a lot of it was funded by debt, and a lot of that debt has been put into wasteful projects. And we know that the productivity growth in China has declined precipitously. So we've got to watch for pockets of excess in India, excess investment, investment being channeled into the wrong places to suit local governments, officials, targets, that sort of thing. Fortunately, we're a long way from that in India. India remains very underinvested. We're a long way off some pockets of overinvestment, but absolutely we need to keep an eye out for that. But hopefully it's not going to be for another 10 years or so.
Ed, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.